I wasn't going to start this video with this, but I want to just ask you a question. Right now, this is Ethereum chart zoomed out on the weekly. We are at a 59 risk score, and I'm taking this data. This is from our risk models that we have back here for Ethereum. So Ethereum's long-term risk sitting at a 59. It's in hold territory, it's in neutral territory, it's in pre-bull market territory. If we're sitting at a 59 right now, and you could just zoom out on an Ethereum chart, and last cycle around this price, we were sitting at an 83 towards the end of the bull cycle. Do you think this is bullish or do you think this is bearish? I'm going to take data, outside data, and I'm going to kind of lend it to this question so that we can answer this question. How bullish altcoins actually are right now? Because this is an Ethereum chart. I want to do the same thing with ADA at this moment of the cycle, but I want to take a couple different things as a foundation to this video that we're going to explore. Number one is the Bitcoin dominance chart, testing the 20-month moving average. The last time that Bitcoin dominance fell below the 20-month moving average was all the way back here in 2021. We have the MACD line right now, insanely bullish for altcoins. The MACD line crossing below that signal line on the Bitcoin dominance momentum oscillator. This red histogram just ticking red for the first time in years. The last time Bitcoin dominance made this move, the MACD crossing below the signal line, was all the way back here 54 months ago. Over 4 years ago, this is what kicked off altcoin season. So I know it's been a rough ride for altcoin holders. I want to just take this data and present it to you. I'm not saying, I am so bullish on altcoins and the crypto space right now. Many of you know that. You go to the altcoin charts, I've been bullish on altcoins since bear market lows back here. And it's just been a higher high, higher low growth since. But I do just want to present the data unemotionally to you so that you can make your own decisions, figure out your own risk and what you want to do in this scenario. The other foundation I want to use for this video is this post I saw from DZ. Bitcoin falls 1 to 2 weeks after Jackson Hole. We had this crazy big event yesterday with Jerome Powell giving a speech. It happens every year. It's like this economic policy symposium where they're really laying out monetary policy. So markets really liked what was said in terms of interest rates getting ready to come down, and we saw a pump. But pretty crazy, Bitcoin falls 1 to 2 weeks after this event. And it has, if you look at previous years, he put a chart here, look at this. It falls after the event. So I want to take that and work it into our analysis as well. So please hit the subscribe and like on the way in if you're not in our intelligence system. We have a free trial going on right now. I know there's so many of you are getting into the system. I know you're enjoying it, you're using it. I have gotten comments that I'm shilling my own product, and I want to just mention to you, we've implemented a free trial. Anybody can go try this. Try our risk model, set strategies, set your exits, start planning, talk to our AI back there without even like paying. So if you don't like it, just cancel before you're charged after 7 days. But this is the system that is built for me and our members, but this is exactly what I'm going to be using in my videos. So I just want to just reiterate, I will be using this in my videos, or this is what I'm going to be using this cycle. So I will be using it in my videos. I can't not. This is the natural progression of my journey here on crypto YouTube, almost 8 years now. So let's jump into this. And I want to start by just kind of going over to the Bitcoin dominance chart. The thing I wanted to note, look at the daily. It's just falling, right? Which is great to see for altcoins. But I do want to note something. If we go back to the monthly, there is still 8 days, 8 hours until the 20-month moving average. We'll get more insight, right? We'll see how this candle on the monthly closes. Are we going to be above, below? Are we going to get a little of a bounce because of this information that we just looked at? Crypto is going to fall in the next 1 to 2 weeks, potentially. It's not a guarantee. I'd actually be very careful, especially if more and more content creators are kind of being like, we're about to fall. This always happens. I've noticed this cycle, market makers, exchanges, they seem to like to see what narrative is picking up steam, and they'll do the opposite. So please be careful with that, right? Just because this is a piece of data that has held true in recent years doesn't mean it's guaranteed. So I wouldn't start using leverage out there in terms of trading this. But let's use this. And what I want to do is I want to look at Ethereum and Cardano. And the Cardano data is even more compelling than the Ethereum data. Here's what I did. In red, these red lines you see on the screen, this is basically those Jackson Hole events, right? Every year. So it's kind of like, for me, what what differentiates where we are now and, to previous cycles, right? We have one here, not previous cycles, previous years. We have one here, we have one here. Well, the thing I did is I put this one in green, because if you just even look at all the data from a business cycle standpoint, from, money printers, interest rates about to come down, we are most comparative to right here. And it just so happens that this was pre-bull market for altcoins. This was, if we go back to the Bitcoin dominance chart, also Bitcoin dominance doing similar things. So this isn't like, I'm not trying to just take data that looks bullish and present it to you. This is just unemotional data when we're looking at these charts. Now, beyond that, right, I do want to look at this. We're at a 59 risk score at this moment of the cycle, testing previous cycle all-time highs when Ethereum was around an 83 at the end of the cycle. We're at a pre-bull market number. At this moment, if we really look at the Jackson Hole kind of time frame in August 2020, Ethereum's risk score was 40. So a little bit lower, but still it was pre-bull market move. If we go to look at the actual risk model, right? So it doesn't matter if you're in August 2020, we're in the 40s, and we can go over a little bit to November, right? We're in the 50s where we are right now. Either way, that was all the pre-bull market move. So the purpose of our risk models is not only just to give us a sense of what's the risk in terms of these altcoins, but it's allowing us to set our exits for a potential new move to the upside coming, right? Like if Ethereum's hitting 100 on the risk model, you're going to want to know it so that you can take profit, even like in the 80s, even the 70s. So that's what we're monitoring right now for Ethereum. But look at where we were in terms of Jackson Hole in the risk model for Ethereum last cycle. So my question for you is, we were at 40 at this moment last cycle, and we were at like an 83 towards the end of last bull cycle. Now we're at a 59. It's interesting. So the question for you, and this is you can have your own opinion, where do you think we are more likely to be? Right here or right here? For me, it is a very strong right here, because we're not even talking about things like just crypto policy. We're not even talking about things like the Genius Act that just got passed. Clarity is on the pretty short-term horizon, and everything else that is going on right now with crypto, right? And the business cycle and interest rates and liquidity. We're not talking about those things. We're really just looking at our risk models, and we're kind of taking this event, which is, Jackson Hole and these previous years and what has happened. So that's what the Ethereum risk model looks like. And by the way, everybody, even if you're not in our intelligence system using our risk models to plan your exits, to strategize, this data that I'm presenting to you right now, I hope you're at least getting some unique value from that you really can't find anywhere else. But if we go to ADA right now, look at ADA. So we're taking our similar thing, and we're waiting for an ADA breakout, right? We're waiting for an altcoin breakout. ADA has this range up to around $1. It still needs to break. That's yet to be seen, especially if crypto is going to see kind of some downside. And I'll end the video with what that might look like for altcoins. But right now, a 43 risk on our ADA risk model. So lower than Ethereum. And if we look at previous cycles, check this out. It was 83 risk at that same moment that Ethereum was an 83. I think Ethereum was an 83. Yeah. At that same moment. Now look at this. Last cycle at this moment in August, Jackson Hole, where we have a very similar business cycle, of 47. It is almost the same risk score for Cardano right now, right? This cycle around compared to last cycle around. And I know I've kind of done this, comparing this cycle to kind of back in November area, even 2020. But it's very interesting now that we have another piece of data to kind of use here, right? And that's this. So the question for altcoins is this. And by the way, on this chart, the altcoin chart, and this is August 2020, here's what the altcoin market cap chart looked like. It fell, right? But it fell to the 20-week moving average, and then altcoin season exploded. The question is, are we going to get a move to the upside? I'm still waiting. We might break out. This dip might not happen, everybody. That has happened every year prior with this event, right? Especially now, if content creators are going to start covering this, we might just explode to the upside. But if it does, right? Well, similar to last cycle in August, it went down to this 20-week moving average, and that range is available for a higher low for altcoins. it doesn't change the trajectory of this cycle, in my opinion. Right here, this dip to the 20-week moving average did not change the trajectory for that altcoin season. I'm not saying we're going to have a similar altcoin season. I think it's most likely it's not going to look really anything like this. We've already seen this. This has been higher high, higher low, slow growth for this space, and that might be a story that continues. But I wanted to take all of these different data points now and present this to you, all while Bitcoin dominance is testing this 20-month moving average. So I appreciate you all hanging in there with me. This is kind of my new office in the very short term in this car. This is my mobile office. But I'm excited to continue presenting all this data to you as we track these markets. Long story short, whether it's ADA, whether it's Ethereum, other altcoins, be very careful in the coming weeks, right? Let's continue monitoring. Ethereum is a move away from all-time high. We might get it. But even if it breaks, if this data holds true in the next 1 to 2 weeks, we might fall. Be ready for it. It doesn't change, for me, the macro trajectory of crypto markets right now. So it's all about kind of monitoring risk, and this is why I have these risk models. This is why we have our exit planner and our metrics that are back here. But it's about zooming out for me and kind of getting a sense from, my own perspective as I study the data, where are we in the cycle? And I really do think we're more here than we are like at some type of top and about to fall into a bear market, right? And this move that happened here, that was going into the quantitative tightening cycle. Now we're on the opposite end of that spectrum, and the risk score from something like Ethereum is way lower than it was then. We're going into quantitative, more of a quantitative tightening slowing down, more of a quantitative easing type of a cycle right now. So going to continue monitoring all of these things, but I wanted to present that data to you, and hopefully it was valuable on this Saturday. I appreciate you cruising through. If you're not a subscriber, please subscribe, turn those notifications on. I know I say it a lot, but we're just getting started. You go to Altcoin chart. I know I've been pretty much saying it. We're just getting started, but I mean, look at it. It's been higher high, higher low growth for crypto, and I think we are just getting started. If you're not in our intelligence system, I invite you to check it out. It's a free trial, everybody. So get in there. If you don't like it, cancel. And if you have any issues, please just hit this feedback over to the left, and we'll be around to help you. So appreciate all of you cruising through. I'll see you in the next video. God bless.